The Great British Pound looks like it wants to push upwards, unless disaster strikes. Stick around and we'll talk about it. Hi, this is Tim with Trading Strategy Guides. The pound sterling is in a real tizzy right now. We're going to see what the chart says about it in a few minutes, but first, remember you can speed this video up by clicking on the gear in the lower right corner of this video and selecting the speed you want to watch. As usual, stay until the end of the video and I'll share another of my trading maxims. So here's a quick look at the descending triangle on the Euro Swissy. This is looking more and more like we're going to get a break for a short. Keep a close eye on it. I'll link the video below that discusses this setup. Okay, now on to the pound sterling. Many of you probably already know that in certain circles, the exchange rate between the British pound and the US dollar is called the cable. The term dates back to the 19th century when the exchange rate between these two currencies was transmitted under the Atlantic across the transatlantic cable. So that's your trivia for today. The big news on the pound, of course, is Brexit. In case you've been living under a rock, the Brits voted a couple of years ago to leave the European Union, and the whole thing has been a huge deal ever since. Without getting into great detail, last week there were referenda put before the British people regarding this event, which was originally supposed to take place this weekend. But right now there's no plan in place for the separation, so everyone involved wants a little more organization to take place. So the event is tentatively extended to April 14th and could be extended to May 22nd or further. I'll include a link below to a great explanation of Brexit by the BBC.com if you're interested in knowing more. Suffice it to say that it's a huge mess and will have a profound effect on the British pound over the next several weeks. However, you may remember me saying that I don't pay much attention to fundamentals when I trade. It's way too much work to figure out how all those factors affect the price, so I fall back to the chart. The chart tells the story of everything we know, but we have to remember that the pound could whipsaw at any moment as new information comes out. So let's take a look at the chart here. Here's the weekly chart of the British pound US dollar. I've added a couple of support and resistance lines here. I want you to notice the drastic volume drop right here just a few weeks ago. We'll talk about that a little bit more later. Also, notice that this volatility has been reduced by a couple of hundred pips since 2016. So we'll also talk about that shortly. Okay, here's the daily chart. You can see that the pound has been in an uptrend channel since December of last year. All the time the uptrend was on pretty big volume, you can see, or at the beginning it was on pretty big volume. Then there's this drastic drop right at the end of January on the volume. I can't seem to find any news on exactly what took place here. I do see the volume gradually increasing a little bit. There's a huge jump in volatility here a couple of weeks ago. The last two times price approached this channel right here, it bounced violently. As I've mentioned before, wicks like this represent rejection, and so this was a violent bounce, particularly this one right here. So with all that evidence, I'm kind of inclined to stick with this trend channel for now. I would buy a bounce from the trend line or a good break of these weekly levels up here. And when I say break, I like to see closed candle, and I'll talk a little bit more about that later on. Do pay very close attention to what the volume and the volatility continue to do here. This will confirm whatever price move occurs. The really big caveat is Brexit. Make sure you protect the downside on this. If Britain exits the EU without a plan, there could be huge downside ahead. And I do want to thank my friends Robin and Tony for helping me to understand Brexit from the Brits' point of view. Thanks, buds. Okay, you made it through another one of my videos. That's just awesome. So now you're entitled to the next trader's maxim in my list, number 13. Yep, I skipped number 12. That'll be paired with another one down the line. And here you go. Tim's trading maxim number 13. A closed candle tells a story. Sometimes it lies. You know, I like to wait for closed candles because I like to say that the closed candle tells you where the price wants to be. A wick, a lot of times price will go one way or another. Sometimes it'll whipsaw. The big banks, they like to, hunt stops, that kind of junk. But the close of the candle usually tells the story, but not always. Sometimes it lies. It's always good to wait until the story is told before you take a trade, but remember, nothing is ever 100% sure in trading, so always protect your account. That is your primary job. Are you sick of hearing that yet? Get over it. You're going to hear it a lot from me. In case anyone's interested, the background image here is the trail to the summit of Black Balsam Knob in western North Carolina, in the U.S., of course, on the Blue Ridge Parkway near the Shining Rock Wilderness. At 6,214 feet, or 1,894 meters, this is among the highest mountains east of the Mississippi River, and the views from here are spectacular when the fog lifts, because there are no trees here due to a series of fires in the area over the years. This is one of my favorite backpacking places. If this video helped you, please click the thumbs up below and subscribe and hit the bell. That bell will let us know that you want to know when a new video comes out. Thanks for your attention. See you next time.